All right, today we are unpacking a pretty wild claim from the YouTube channel Metals and Markets. They're talking about a silent crisis brewing in the silver market, and it's a story they say the mainstream financial news is completely missing. So it all kicks off with this number, $100. According to the source, they're pointing to a very specific weekend, January 12th, 2026, when they claim a major dealer was actually charging this much for a single 1-ounce American silver eagle coin. Okay, but here's where it gets really weird. At that exact same time, the official spot price, the one you see on the news, was just $85.55. That is a massive 17% gap between what the screen says silver is worth and what it actually costs to hold it in your hand. So what on earth is going on here? Now, according to the source, this wasn't just some random market fluke. No, they claim it was a direct result of a bombshell event, a supposed criminal investigation by the Department of Justice into the chair of the Federal Reserve. Something like that, they argue, would absolutely shatter trust and trigger a huge loss of confidence in the entire system. So to really get what's going on here, we've got to talk about something the source calls the premium gap. This is the idea that two completely different silver markets, the one on your screen and the one in your hand, are starting to just go their separate ways. And this difference, it's absolutely crucial. You see, the paper price comes from futures contracts, which are mostly just bets on where the price is headed. But the physical price, that's all about real-world supply and demand for the actual metal. And right now, those two markets are telling two completely different stories. The source actually has a great way of explaining this. Think about it like a concert ticket. The official price is listed at $85, right? But the website says sold out. You can't actually get one for that price. The real price is the $100 the scalper is charging outside the venue. That's the true cost to get in the door. The paper price is a ghost. The physical price is reality. And that right there is the whole point they're making. The dealer selling you that coin for $100 is telling you the truth about scarcity and fear. The price you see on the screen, well, that's just a fairy tale. Okay, so what happens when the real-world price of something starts to totally break away from the official price? Well, according to this source, the people in charge don't just sit back and watch. They have an intervention playbook. And believe it or not, we've seen them use it before. They tell us to look back at the 1980s and the Hunt brothers. When they tried to corner the silver market and drove the price up to $50, what happened? The exchanges literally changed the rules mid-game. They jacked up the margin requirements, forced the Hunts to sell, and bam, the price came crashing down. It was a direct, top-down intervention. But here's the kicker. The source is adamant that this time is completely different. Back in 1980, you had two guys you could easily point to and call villains. But today, they argue it's not about a couple of billionaires trying to make a buck. It's a decentralized global movement of everyday people driven by a loss of trust in the system itself. And how do you stop that? So you can see where this is heading. If this trend keeps up, what could actually happen next? Well, the source lays out a few potential scenarios based on what they're seeing. All right, so the source basically maps out two different paths. In a conservative scenario, if the spot price hits $100, that same coin would cost you about $117. But in what they call a stress test scenario, say a real delivery crisis hits the exchanges, they predict those premiums could explode to 50%, meaning that same coin would cost you $150. Now, one of the big signals they're watching for is something called the gold to silver ratio. It's just how many ounces of silver it takes to buy 1 ounce of gold. Right now, it's about 54 to 1. The source claims that if this ratio drops below 50, it could be a massive signal that a true silver mania is kicking off, with silver starting to dramatically outperform gold. And this really brings us to the ultimate point of their whole analysis. The action we're seeing isn't about silver as an industrial metal anymore. It's become a barometer for fear. It's a crisis proxy. You see, they're not just talking about silver here. They're framing this as a symptom of something way, way bigger. It's not a temporary spike in one asset. It's a reflection of a deep, growing loss of faith in the very institutions that are supposed to manage our entire financial world. Which, of course, leaves us with the million-dollar question from all this. What is the real price of any asset, not just silver, when the trust that holds the entire system together begins to crack? What happens when Pandora's box is finally opened for good?